All right, good morning. Today is October 2nd, 2024, and I'm back with another edition of the live show. And lots of stuff happening in the world today, and interesting things going on in the market. So let's see. A real quick recap is the port worker strike is just starting, and that seems like it could be a potential fiasco, a negative for the market and the economy. So let's hope they get that figured out pretty soon. That's sort of a big deal. Um, the other thing, of course, tensions in the Middle East escalated. Last night was the vice presidential debate, which was quite interesting. Um, Market wise, the couple interesting things. The Chinese stocks have gone absolutely ballistic in the past few days based on the idea that, and I was looking at, we'll look at this in a little bit, but I was looking at the longer term Chinese market, and it's amazing how far down it is from years past. And so I guess they decided to step up and do something about that because, as we all know, the stock market is an indication of how well the leadership is running the country, right? So that's kind of interesting. Another interesting thing is that 2 weeks ago the Fed lowered interest rates, right? They lowered the Fed funds rate, lowered interest rates, and interestingly enough, like the 10-year yield is higher than it was when they lowered rates, and so some other interest rates are also higher. So that's kind of counterintuitive. And so that's kind of a brief recap of where we are. Now, yesterday we had a pretty decent sell-off in the S&P based on, a couple of the things that I just mentioned, the macro factors. So we look at that real quick. There was a bunch of kind of narrow range candles forming, and right after there's the Fed announcement right there. As you recall, the Fed announcement was kind of an interesting day because, oh, something wrong with my YouTube stream? Huh. That's not good. It says YouTube's not receiving enough data. Huh. Well, that's sort of interesting. Let's see here. It says that my stream status is poor, so maybe I should. Well, I can't change it right now in the middle of this. Oh well, we'll see how this turns out. Unfortunately, the internet itself has been struggling because all the devastation from that hurricane that really, I mean, caused tons of devastation. And so that could have something to do with it. I know there's probably lots of people without internet service or cell phone service or power still. So that's a mess. Um, but I will fix this for next week. I changed the latency on my YouTube stream to from ultra low to low, and maybe that's affected it. So we'll have to see. Um, I can't restart the show because that would foul up the player. So we'll just have to see what happens. We'll see if there's buffering or what goes on. But anyway, S&P looking a little bit suspect here. This is a big area of support, which I had drawn on the chart, and there's your Fed day right there. And of course, it looked like the market was going to reverse. Intraday, it hit an all-time high in the history of the world, and then reversed down. And boy, that would have been what everyone expected for follow through to the downside there. And instead, they had the old delayed reaction, which caused it to gap up. And then we had a bunch of narrow sort of range days and a little move up to, gap ups to new highs. But yesterday was sort of a big deal because there was a lot going on and it spooked the market and had a fairly significant. And then of course this morning we gapped down, pushed a little bit lower, took out yesterday's low and traded all the way back into the area of the Fed meeting 2 weeks ago. And as you can see now, there's a few buyers stepping in here, and It'll be interesting to see what happens from here. September typically is the worst month of the year, and as you can see, September started off with a sort of a big sell-off, right? And then turned around, and of course the market ran up to new all-time highs. So one interesting point to note here is that the MACD is about to cross to the downside, right? It's just barely sort of hanging on here. So not looking, honestly, not looking so hot, which, you know, totally no big deal. But I think everybody expects the market to continue higher. And so it'll be interesting to see what happens. I mean, everything, typically the fourth quarter, which we just entered, is the strongest time of the year. Everybody knows that, the fourth quarter. And so even if you do get some weakness initially around the holidays, the market tends to be strong and rally and all that good stuff, but we still have to get through October. Speaking of which, I'm still getting over my cold, which, as you recall, last week I was in pretty bad shape. Had a pretty good cold, but the show must go on, right? Let's look at the Qs here. Interestingly enough, the Qs, while they do have that really nice sort of W pattern here, they basically rallied up just enough to close the gap. And let me draw a little, there we go. Yeah, closed that gap right there. And now they're selling off a little bit. And so potentially, well, not potentially, as we see a little pullback here, there's a good spot right there to draw a trend line across the highs. So there we go. Draw a little trend line across those highs, and I don't really want to draw one up through the lows, but I could. But this would be like pretty steep rising trend line. Well, let me draw it on there just to see how it looks. So just to see how it looks. Well, this thing's kind of in the way. I got my screen set up a little bit different today than I normally do. There you go. So the Qs still kind of hanging on there, right? There's the middle of the W pattern right there. Middle of the W pattern's kind of right below where this resistance is. And so the Qs are just basically in no man's land, but hanging on pretty well. But it's interesting to note that you have to go all the way back to early July. That's when the prior high in the Qs happened. And then, of course, we got a rejection right here. Speaking of which, well, I think what I wanted to do was pull up the. I actually have NVIDIA. There we go. I have NVIDIA in my list here, marked up from last time. So, yeah, we talked about this, I believe last week and maybe the prior week, was that we would see what happens when NVIDIA like ran up to this upper trend line here, and we can see what happened. It kind of, poked through a little bit, kind of got rejected. I guess I could probably, the thing about trend lines is they're never going to be exactly exact, and that's fine. They're just basically meant to give you an indication of, sort of levels and areas, and that's kind of like why I like drawing support and resistance zones. Anyway, NVIDIA obviously is still constructive looking. Let me zoom out here. Pretty constructive longer term. And so, you got maybe a similar pattern to back here forming, sort of a triangle pattern. Basically, where you could draw a trend line across these highs, and then eventually it broke it to the upside. But right now it's kind of right in the middle here. So this is a big driver of the market, obviously. It's going to be interesting to see what the effects of this dock worker strike are and how long that goes on. So, I mean, they say it's costing the economy billions of dollars a day, which is amazing. And from what I've seen, it doesn't look like it's going to be resolved anytime soon. So I don't know what the ripple effects of that are going to be, but let's take a look at the VIX here, because yesterday the VIX spiked up over 20, right? And so you can see today it opened higher, poked at 20. It's a little bit below it, but MACD on the VIX is turning up there. So that's usually, well, here's the thing, is like the VIX over 20 means that there's some actual market action. VIX below 20, the market tends to be dull. So the other thing I wanted to look at, and I talked about these Chinese stocks, look at this. You should look at that. Look at this just explosive move on this China Eat Large Cap ETF. Let's go to the monthly on this, just so we can go way back here and get sort of a perspective. And think about this. Look at that. So this thing looks like, well, it looks like they IPO'd it in 2004, right? So what was that? 20 years ago, right? So this is incredible. And obviously I don't know the particulars of how well this tracks anything. So if you're listening to the show live, for whatever reason, I had YouTube was telling me there was a little bit of a connection problem earlier, and now all of a sudden it says excellent connection. So hopefully the replay turns out okay on this. This is typically what matters the most, is because most people watch this thing on replay. So I know some of you join me live sometimes, but people like to watch things on replay. Every time that we used to do presentations or webinars or whatever, live shows, that everybody would always email and be like, is this being recorded? Is this being recorded? So I'm the same way. Honestly, I prefer to watch things at my convenience. So these shows are obviously recorded live, and then I leave them on the website at investingsystems.com. I embed them on the website at investingsystems.com, and in theory, this is the live show playing right now. So go to investingsystems.com, hit that live show page, and then each week the live show stays up there for the entire week until I do a new one, and then I embed the new live show page on the website. And then, interestingly enough, and this is always something to keep in mind, just a little bit of housekeeping. If you hit the show page and if you hit the show page before I update it to the new live link, then there's a possibility that you're going to get last week's replay, and so you just want to hit F5 on your keyboard to refresh the page right before the show starts. That way you'll make sure that you get the live version. So back to what I was talking about. Here's the Chinese stocks, and as you can see, they've been languishing for the past, well, since basically since this high back here, right? And so the funny thing is, I remember this very well. Back in 2015, 2016, right? There was this big sort of mania in China where everybody was investing and trading in stocks, and Chinese housewives and all this kind of stuff, and the government was encouraging people to speculate in the stock market. And then their economy slowed down, and they were starting to have some issues, and the market sold off dramatically in 2015, and that took everything else with it, right? I mean, the big banner on CNBC said slow down in China, and literally that spooked, well, it was the narrative they used to talk about how it was spooking all the other global markets in the world market, and our market was selling off, right? And so that was a big deal back then. And then, of course, you can see over the years it managed to come back up and sort of double top, right? I mean, you're talking the 2007 peak like we had here, right? That was the housing bubble. And their market peaked at the same time. And as you know, right, this was the great financial crisis sell-off here. They never really recovered all the way until, until right here, and then of course their economy selling off again. But so, China is basically introducing a bunch of stimulus because I guess they're tired of seeing their market, hit these lows, and I can't imagine. I mean, this is a monthly chart, and so imagine investing in, a country in an index and having 20 years go by and making no progress. So, and that happens. There's there's stocks out there, brand name stocks that have the same sort of thing. So anyway, um, back to reality here. I saw something on Tesla this morning. Oh, anyway, so there was one other thing I wanted to mention. I had saved this post that I saw. It's basically just shows a big list of these Chinese stocks and how they've just started gone parabolic here in the last week. Look at that. The funny thing is that they've really, Chinese stocks have really been sort of out of favor, but the turnarounds just recently here in some of these things, absolutely incredible, um, amazing. And so whenever something goes just absolutely parabolic, it's great for a short amount of time, but then you have to be extremely cautious about chasing. So I think, I feel pretty good about Alibaba for a lot of people because I know that like going into this year, and that was one of the big sort of turnaround type of plays that a lot of people were talking about. Let's look at that real quick. Let's look at Alibaba let's go to the monthly chart, right? So this is a good example of, what I was just talking about there. So I remember when Alibaba IPO'd, I mean, that's all they talked about on CNBC for a month, basically. And I mean, it had as is typical, you got the initial, and this is a monthly chart, so you had a few months where it was the hottest thing since, whatever. Then, of course, it sold down, went below the IPO price, but over the years, you can see that it was basically went up, it tripled. And then here you go, back in, the end of 2020, 2021, when the Chinese market started selling off, you can see years and years and years of decline all the way back down to, it's trading around the IPO price. And then, like almost all of this year was kind of doing nothing, but on the shorter term charts, it was building a pretty nice base. Well, this is interesting. This is the 200-week moving average, and it seems to be running right into resistance there. This is actually, kind of a good looking basing pattern, to be honest with you. And so, but man, you talk about having to be patient. Would have had to be extremely patient with this. And then all of a sudden, China steps in, decides that they're going to introduce some stimulus, and these things just take off. So, but the longer term perspective, as you can see back to that monthly chart, is now it's extremely overbought in the near term. It's running up against some resistance, but and of course, the main thing about Alibaba was, and I saw a lot of fundamental metrics theoretically looked pretty good, but I mean, you never know with Chinese stocks. A couple other stocks I wanted to look at. This super micro computer. Let me just go to a weekly chart on this. So this thing right? This was, for a period of time, was like one of the hottest stocks going, right? Remember this. It just split. This just split 10 for 1. And they've run into a bunch of trouble. I believe that they've well, they've delayed one of their filings, and they're being investigated for accounting irregularities, that type of thing. And so, this was the big AI play at the beginning of the year here, and so I mean this was $1,200, right? And this was $500, so it just split 10 for 1. The funny thing is, I believe they announced that 10 for 1 split when they came out with their numbers last time or something. I don't know. I mean, I haven't really followed this story that much because it's kind of a broken stock. I mean, kind of. It is a broken stock. So, but it just goes to show you that a lot of times these parabolic moves end up giving it all back. And so I'm a huge proponent of scaling out of a stock when you have some profits, lower your cost per share, lighten up, you know, that type of thing. Speaking of which, let's look at Microsoft real quick because I know we talked about this last week too. Interesting thing about Microsoft here is it's looking a little bit dicey, to be honest with you. It's just a daily chart. That's the 50-day moving average. For whatever reason, I only have a 50-day moving average on this chart. But you can see that W pattern that it broke through, and then it ran into resistance up here, and now it's back in a pullback mode. And so it's an interesting looking chart because I had talked about, a breakout. I had talked about a breakout above this line, potentially taking it back up to this high here. And so what actually happened was it gapped up. It gapped up and then just sold off. So it's kind of setting up again, to be honest with you. But a lot of these tech stocks have this big sort of, just like the Qs, they have a couple of highs that make it easy to draw an overhead resistance trend line on. And of course, it's also got a really nice sort of pattern happening on the low here. So Microsoft, this is going to be super interesting to see how this plays out. It's actually approaching the lower end of this. I'm sorry, it's actually approaching the lower trend line here. And so it's going to be interesting to see what kind of a bounce it catches off of there. This I could probably ditch. If you go all the way back here, sometimes I just like to move these things around. There is just an absolute humongous amount of support right around here. This is kind of where it broke out, but you can see all this. I mean, this support goes back to, earlier in the year. And a couple times it poked below it, but, this candle's sort of an outlier here. So it'll be interesting to see how this plays out. And this kind of resembles the Qs also. Oh, I thought I saved that. Anyway, tons of support below, overhead resistance above at these levels, and then of course you got the trend lines which are offering both support and resistance. So this is definitely going to be one to keep an eye on. I want to look at Google too because, in my opinion, I haven't really looked at this much. In my opinion, Google is going to struggle. Google's going to struggle as going forward, and just based on their search, I think. And now, of course, Alphabet is into all sorts of stuff, and somehow they miraculously they miraculously, make tons of money on all kinds of stuff. But I got to tell you, Google search, the days of, well, I don't know. I mean, not everybody's. What amazes me is how not everybody is all that sophisticated when it comes to surfing the internet, right? Um, but here's the thing: is younger people and technologically savvy computer and internet people are moving away from Google search, and they're using AI search engines, right? I mean, they're using Copilot and Perplexity and Chat GPT, and of course Chat GPT is launching Search GPT. And so I think that the days of just searching for a keyword and getting a bunch of ads and stuff are kind of coming to an end. And younger people are more savvy when it comes to this type of thing. So, and of course, Google is also doing the same thing with their Gemini AI and trying to. But I've seen a lot of stuff. I've done a lot of reading. I follow a lot of this type of thing, and Google's done a lot of updates, and I mean their search is just the updates made their search so much worse. Now when you search for things, you end up with links to Reddit, right? And so I mean they're linking to message boards, and they're linking to I mean there's just a lot of issues with their search, and I think it's turning people off. So it's going to be interesting to see how this plays out. From a technical perspective, right? From a purely objective technical perspective, um, it's kind of a constructive pattern if it can break above. It's sort of forming. Well, it's either forming an M, or you can look at this and say it's a W. But the more that it sort of coils up under this 170 level, which is an obvious area of resistance, could be forming a big cup, right? You guys remember back when the market itself was forming a big cup? I might as well save this so we can come back and look at it. When the market itself had this kind of pattern and it sold off and kind of bounced a little bit, the conventional wisdom was that it was toast, and as I pointed out here on the show, it looked to me like, and it wasn't quite this clean, but it looked like a big giant cup and handle forming. And so, same sort of thing going on here. What's nice about this is there's a really sort of a clear, there's a clear level there. So the over and under obviously is 170. So it may come in a little bit, it may pull back, but eventually down the road, when and if it breaks out over this level, I would expect a really nice rally up there. So um, let's look at the financial. Oh, that's not the chart that I wanted. I wanted to look at the financials, but I didn't necessarily want to look at the Heiken Ashi chart. So let me go back. I want to look at XLF. There we go. So the financials have always been like the most boring sector in the world to me. So it's still worth looking at, but over the years, you see a lot of talk about the financials amongst the people on CNBC, and I guess the thing about the financials is they're just they're typically, I mean, obviously they sell off and go on these big runs, but generally speaking, I mean, look at the increments on this chart. The financials are just boring. You don't expect them to move a whole lot, and so but they are kind of hanging on right here, right below. Let's go to a monthly here. Yeah, they're like right at all-time highs, and so obviously over the years, the people that have said they like financials, but I mean, look at this run since the end of last year and the beginning of this year. There's that weekly sort of W pattern I always talk about. So that's kind of why I wanted to look at this. So, that pattern that I talk about a lot also manifests and is probably even more powerful on a weekly chart, but there you go. There's sort of that, you have to sort of visualize these W patterns because they're not always perfect, they're clean, but there you go. So when you do see them, pay close attention, and that's one of my favorite patterns, the old W, right? So here we are. Real quick, let's look at Apple. Just came out with their new phone, and Apple just kind of hanging in there, right? There's a weekly chart. Let's go to the daily chart here. Take a look. See what the daily chart looks like. Yeah, it's just kind of, it's kind of gone nowhere. There was the last earnings release. I happen to have that on this chart. So just kind of sideways price movement, nothing too exciting. Last thing here we'll look at, and boy, these charts can be annoying at times. Price of oil was a weekly chart of the price of oil. It's still amazingly is still relatively low given what's going on in the Middle East, but there's always you can see here, this is a daily chart, you can see that yesterday, actually this would be yesterday because I believe this chart's delayed by a day, but it's a futures contract. Anyway, the price of oil is popping up a little bit, and so, between the dock worker strike and the price of oil and all these tensions in the Middle East and all this, the last thing that we want is inflation to come back, right? And I think the Fed has to be pretty nervous about that because that's their big thing is they were just absolutely dead set against doing anything that might cause a second wave of inflation. But of course, this time they can blame the supply chain again, just like they did last time. They blamed, they created trillions of dollars out of thin air, which created the inflation that they were been trying to fight, and then they blamed it on the supply chains during COVID. So now with this dock worker strike, it's a perfect excuse to blame the supply chains again. Anyway, I'll leave it with that. Hopefully I'll be over my cold and be able to think clear this time next week. So thanks for tuning in. I'll see you back, same place, same time next week.